Well, hi there. I'm Bill Blain from Shard Capital. I'm delighted to have two of my colleagues from Shard Capital Assets Management side, Ernst Knacke and Benny Osei, who have joined me today. And we're going to talk about the cryptocurrency markets. Now, I've been fascinated to watch the trading volumes of cryptos, and not just Bitcoins, but especially some of the other crypto coins, the way that they've taken off. I've also been watching with great interest the launch of Coinbase. So fascinated that me, a hardened anti-crypto player, actually invested in setting up an account. And much to my surprise, I found that my account is up nearly 26%. I think that's mainly because I reckoned that Ethereum looked more less Dogecoin than some of the others. But what I really wanted to do today is to talk round where the cryptocurrency markets are going. I remain an unremitting skeptic of the whole thing. But my colleagues who are younger, smarter, cleverer, and understand the zeitgeist better than I do can maybe explain what some of the trends are. I mean, what fascinates me is the volumes that we're now seeing transacted in the crypto markets. They've gone from 200 million last year to somewhere in the region of 20 billion. We're seeing even completely joke coins like Dogecoin now trading at a market cap of 50 billion. Gentlemen, take me through where we currently are in crypto.
Right, Bill. I think clearly your ability to spot a trading opportunity is still much better than myself and Benny. I think taking a step back, the whole digital asset space is truly fascinating. If whether it's blockchain and NFTs all the way through to the metaverse and Web3, it's the pace at which this digital space is attracting capital, brain power, and innovation that is truly phenomenal. And on the other side, you compare this to the current financial system, the current industry of money that we have, that is really built on outdated pre-internet technology. If you think of SWIFT, which accounts for as much as 50% of cross-border payment orders, the SWIFT technology or the SWIFT design is comes out of the early 70s. So what happened with, I think the Bitcoin white paper in 2008 is it laid a foundation for, this industry of money to enter the digital age. Ethereum, the coin, or more specifically the platform that you're familiar with, has taken this blockchain technology a step further and has created what we now know as decentralized finance or DeFi. More recently, and even a newer kind of network, Polkadot has come up and rose, and they effectively bring with it solutions, to some of the inefficiencies or concerns one might have with the Ethereum platform. And it's just the rate of change, what you can achieve with all this, that is so phenomenal, and the amount of capital that's attracted. So, we truly see it as a very, very game-changing technology with a very significant opportunity ahead of itself.
Yeah. But one of the big issues with Bitcoin is that the sheer baggage of the blockchain that it carries means you can only transact, what is it, 8 transactions per second compared to PayPal or MasterCard, which can do,
yes.
thousands of transactions. So
that's very interesting. It's a very interesting point, Bill, and that's very true. And that's one of the hurdles with Bitcoin. Something that Ethereum kind of bettered, and now Polkadot, the latest kind of network, they can do more transactions per second than Visa can through the Polkadot network. So the point being that this is such an early stage in this technology, but the competition to this technology is, an outdated world industry that is built with pre-internet technology and just cannot compete. I mean, there is problems, but it's about, identifying the problems and then solving those with solutions.
Okay, but what I think I'm seeing is a gradual evolution of this aspect of cryptocurrency. The original concept of Bitcoin, interesting, but what can it do? It's slow, it's cumbersome, it's unwieldy, it's extremely difficult to hold because of this concept of a wallet that is repeatedly hacked. Now we're getting to a new evolutionary stage where transactions can be fluid, they can be fast. I'm still wondering why it's better to use a crypto than simply to use my dollar or my sterling account, but that's a question for another time, perhaps. Is there still another evolutionary stage to go before we get to, a properly fully evolved, able to walk on land and swim in the sea type of crypto?
Definitely. I mean, definitely, but it comes back to that point I made in the beginning around the amount of capital, innovation, and brain power this industry is attracting, right? If you think of the number of Uniswap, which is effectively a challenger to Coinbase, and we can get onto that in a bit, is a decentralized exchange that make as much as $2 to $3 million a day for the liquidity providers on that platform, and that's a completely anonymous, platform where you can exchange cryptocurrencies today. But the and that business is a couple of years old, right? So the evolution of this, I think we're still in the very, very early stages of what will be the digital money world.
Okay. Before we move on to talking about Coinbase, could we just talk about Dogecoin, or is it Dogecoin? I don't know. I mean, what's it actually called?
It's a bit dodgy. Benny, do you have an opinion on Dogecoin? I think it's one of those dodgy things that I didn't really.
Yeah. Well, I wouldn't have a true opinion. The only thing about Dogecoin is, look, it was founded by two individuals that pretty much started it as a joke, as they themselves have admitted, and and it has turned out to be incredible. It created a lot of conversation, and a lot of people have invested in it, and obviously the currency, if that's what you want to call it, has spiked has done some significant numbers. And I think currencies such as Dogecoin, unfortunately, delegitimize the crypto space, essentially, because that's a perfect example of a coin which doesn't have a true, call it, intrinsic value or any sort of it can't facilitate anything. Unfortunately, it has no true utility, and it's become a proxy for essentially just betting. And kind of it's become kind of like the go-to for the YOLO community out there, essentially. That
what is YOLO? Remember,
so essentially, at the moment, a lot of the younger investors are investing into securities that are very high risk, that maybe do not have they do not have strong fundamentals or do not have, again, any sort of intrinsic value, but it's kind of like a bet, essentially a very naked bet on a specific security or company. And
let me see, this thing has no intrinsic value at all, except the fact that someone else might pay you more
for it.
So it's a last fool in.
Exactly, and it's worth saying as well that it's been propagated also by some very well-known characters and individuals on platforms such as Twitter. Has created even more.
We're talking about Elon Musk here.
Yeah, so Mr. Musk would be one of them.
Okay, because I'm worried about this, Benny, because my son, who's not that much younger than yourself, did call me the other day. He ascribes far more wisdom to his father than is sensible, and did say, "Dad, should I invest in Dogecoin?" And I found it hilarious as I decided to do some digging on it and discovered that, the two guys behind it, they had good track record, but they did it as a joke. And the whole programming behind it was done in 3 hours by simply taking the open source for Bitcoin and deleting Bitcoin replaced with Dogecoin. And and the thing's taken off. Sometimes jokes take on a life of their own, and that's where perhaps they become dangerous. But if we could move on, though, let's try and present. As I keep saying, I'm very skeptical because I don't see really anything that any crypto, even a really good one like the ones that are currently making me money, can do that proper currency can't do. Or am I missing something about the potential applications of cryptocurrency in the financial markets?
Well, I think Bill, so one thing is, there's a lot. One of the negatives of cryptocurrencies that's been cited quite frequently is the use of cryptocurrencies on the dark web. The thing is, ultimately, there's more illegal trade that happens in US dollar than there is in cryptocurrency.
Really, you shock and horrify me.
And what were that's just one of the, and then on the other side of the coin is, these fiat currencies are supported by or backed by central banks that are arguably going in the direction that does perhaps not provide us with stability or the confidence in the values of these fiat currencies, right?
Yeah, but here's the thing, Ernst, I've spent my entire career in finance, effectively in bond markets, but in the last few years more widely. And as a bond trader or as a currency trader, you're betting on the faith you have in a particular government to maintain its currency, and you're betting on their credibility. And at the moment, you can put definite credibility on most central governments because they're probably doing the right thing in this environment by fiscal policy, which means borrowing lots and loads of money. Now, everyone's doing it, and many of the fears that people have about governments creating a massive debt collapse in their currency based on my wide experience of the bond markets, look how old I am, you are actually, that's a libertarian argument that if governments borrow to spend, then it's ripping off hardworking entrepreneurs. And it does strike me that's a theme, of this. Crypto's a much better solution because it's not governments ripping people off. But, what's the backing for these things?
Yeah, well, I think so. Two things. I don't think any. If you think of politicians and central bankers, the majority of them anyway, I think individually they try and make the right decision. I don't think any of them go out and intentionally try and hurt society or make the wrong decision for that matter. But I think that the point is more with regards to let's call it the independence and the requirement of having a backing. Bitcoin effectively does not require a backer. It's like gold. Gold doesn't require a backer. All you need is a confirmation of that you own it, right?
Yes.
So this is what the blockchain provides. Now, then, you need society or at least the majority of a group of people to agree that this asset has a value, right? Dogecoin, Bitcoin, gold. There's many examples through time. You can take it. Maybe it's a Mona Lisa. Whatever it is. It's there's certain assets that a group of people or society has agreed there's an intrinsic value to this, and that's how that value occurs. So that's all you require. You don't need a central bank or a government or an authority to back the value of these and confirm the value of these, which is what you have with fiat currencies.
Okay, but I think what we're seeing now, and this is something you two have educated me on over the last year, has been the increasing numbers, which we can see in the trading volumes in cryptos, would suggest that the number of people who have that confidence in the underlying cryptos is continuing to increase. People say it's the adoption argument. At what point are all the doomsters like myself who can't see the point going to be outnumbered by the number of people who do see them? Or are we there already?
No,
Where adoption is accepted? Or is it possible we continue to see this massive volatility and a collapse in companies?
So I think it's so early in this evolution that for the first thing, I think that the people that own Bitcoin, Ethereum, Dogecoin, Polkadot, whatever it is, they probably hold it for speculative purposes. They believe the value of that asset is going to go up 3, 4, 5x over the next decade, right? Those that hold it because of utility or because of the digital gold narrative, I think is still in the minority. And then those that hold it for institutional regulatory purposes are effectively zero, right? So that is the market that once, if you start seeing insurance and pension funds starting to allocate to this space because they start believing in either the utility or the digital gold narrative, that's going to be the game changer. But that market is not involved to almost zero involvement at this point.
Okay, Benny, let's move on and talk about Coinbase. You were the one that educated me on Coinbase some time ago. If my Coinbase accounts lose money, you will be getting the blame. At the moment, you're up 26%, so feel safe and secure. But Benny, talk me through what went wrong with the Coinbase IPO.
I don't think anything went wrong with the Coinbase IPO.
But it's down 30-odd%.
Yeah, but I think where this obviously
how much more wrong can it be?
I'll tell you this, and I am sometimes an optimist at heart, but it's important to look at the numbers, right? Because this is at the end of the day
30%. That's a big down.
Well, I tell you, this is a company which if you look at their 2020 financials, is a profitable company, right? It clearly has. It has a business model that has validity to it, and is clearly a growing platform in an ever so evolving space, right? And we are just at the beginning of this. And actually, as Ernst said earlier, the current lack of involvement of institutional investors will even propagate that further once those investors come in. But when it comes to specifically the IPO, I think obviously there was as many IPOs we've seen this year and last year, there was probably some fear of missing out, some FOMO happening at the very beginning there. So you saw the price launching around 380 and reaching in the 400s and then dropping thereafter. The thing is, you have a company here who generated about $1.1 billion in 2020 end of year numbers, and is estimated to generate just about another $1.8 billion in the first quarter of 2021, with $730 million on the low end in profitability. That's about a 40% profit margin you're looking at right there. So this business is, on its own, has a lot of potential, right? Coinbase has, as of the end of Q1, has 53 million verified users with about 6 million monthly transacting users. So you can see that this platform is actually generating some serious numbers based on the, kind of like the adoption that is being put on. And obviously, a lot of these are retail traders as well. It's very, very important to mention this. There's a lot of retail money being involved in the platform. But if you look at it from this angle, Bill, Coinbase had about $90 billion on its platform at the end of 2020. By 2021, or at the end of Q1 2021, it has about $223 billion on this platform. So you could see that the shift of, let's call it the popular opinion when it comes to the crypto space is ever so increasing in a positive view, in my opinion. Because of this $223 billion, $122 billion of that is institutional money. as you've seen with companies such as Tesla, MicroStrategy, even Morgan Stanley, more and more institutional-like investors are starting to partake in the cryptocurrency space. And the go-to platform for this is Coinbase at the moment, because Coinbase has done an exceptional job in implementing strong technology, strong security, ensuring that is abiding by the right regulations in the various markets that they operate. I believe in the US they are regulated by the SEC, and in the UK they're actually regulated by the FCA as well. So it's bringing a lot of legitimacy to this space. Now you got to remember that Coinbase is not only about its transaction business or its exchange business. Right? As the crypto economy or the crypto space keeps growing, there is the borrowing and lending side of things that they will be facilitating. There is the staking side of the business that they will be also facilitating, and the custody side of things as well. And Coinbase has actually placed itself in a very, very good spot to be able to facilitate that, not for its partners, so other crypto-related businesses, but also for institutional investors like the pension funds in the future to be able to custody those assets on their behalf. And that revenue that will be generated from these other types of businesses will facilitate a very will start become a big part of the revenue stream. Now the this transaction business accounts for about 96% of the revenues at the moment, which is a lot, which I mean is almost all the business. But I think by the end of 2021, we will start seeing some significant change in that, where we will see the staking business, the custody business starting to generate some very attractive numbers that will justify that $100 billion valuation.
Okay, but if I put my normal serious investor hat on, I'm looking at new technology and I'm trying to think to myself, okay, this is standout. This is making money. That's definite plus.
Yeah.
But there are half a dozen other exchanges about to go in there. So the moat's not terribly deep. The margins are going to start to drop, and it's going to become yet another of these overcrowded spaces.
Yeah. So what I will say to that is, yes, absolutely. You see platforms such as Aave, Binance, Uniswap. A lot of these platforms obviously facilitate the same things that Coinbase does. But if you look carefully onto these various platforms, so let's take, for example, Binance and some of these other ones, they do facilitate the trading of a coin such as Dogecoin, right? Which is much more riskier, where investors tend to do a lot less due diligence on and invest in them. Coinbase does not facilitate the trading of such currencies. They have an incredibly rigorous process to be able to have a coin listed on their exchange. As of the end of 2020, I believe that Coinbase had 15 different blockchain protocols on its platform and 90 different crypto assets that can actually be traded. Now, that is a significantly smaller number than what you'll find on Binance, for example, and that is because of the legitimacy they want to bring to this market. They are truly at the forefront of it. So they are trying to ensure that anything that is traded on their platform is fully legitimate. It has been audited and is in compliance with all sorts of regulatory measures. Especially if, and it's incredibly important for these businesses to do this, especially if they want to attract the institutional investor and the pension fund managers and stuff to participate in these spaces as well.
And Bill, there's a lot more than just one prime broker or custodian out there in the world, right? There is space for more than one cryptocurrency platform in this world, like Coinbase. But I agree with Benny. What Coinbase brings to the market is legitimacy, and I think that's crucial. When you took the selfie and you put in your address and your personal details when you had to open an account with Coinbase, that is for AML. That's because they're working with the regulators to make sure that what they do is correct, and that's one of the reasons why someone like Grayscale, which has 35 billion in their Bitcoin trust, why they use Coinbase as the custodian, right? So
right. I was going to ask about Grayscale, where coin trusts and things like that fit in.
So
they're the kind of institutional account that we're seeing now using Coinbase.
yeah. So ultimately, whilst I mean Grayscale, so ARK would invest in Grayscale for their kind of exposure. But ultimately, I see the end client, whether it's an ARK ETF or the Bitcoin Trust, the end clients are still retail markets. It's not pension funds and large insurance companies, right? So
yeah.
So it is the end market is retail markets.
All right. So it's what you're effectively saying about the institutional market in cryptocurrencies. It's the institutional part of the cryptocurrency.
I talk about the regulated investment accounts out there in the world, which is pensions and insurance basically.
Right, because that's one of the big things that makes me suspicious is when I am seeing Bitcoin and Dogecoin so influenced by the comments of one particular speculator who happens to be a multi-billionaire, or Bitcoin being pushed by a famous investor whose funds are up to the eyeballs in Grayscale product. It just strikes me this is somewhat manipulative still at this stage.
I think the volatility will kind of suggest perhaps what you are saying is true. I think, like with any very early stage technology and asset, the volatility is bound to be very significant. It's bound to come with a lot of uncertainty. It's bound to come with people trying to incorrectly take advantage of this kind of, let's call it, innovative new idea.
I remain a skeptic, but I think that cryptocurrencies are here to stay. I'm very much of the opinion that Bitcoin, first mover, but it's probably obsolete, and it's at the end of its evolutionary chain. Something better is going to replace it. Based on what I have been able, I've done the reading. I don't understand most of it. You got to cut through so much cack when you're reading about cryptos. But having done the reading, it strikes me that coins like Ethereum and Cardano, where you can see applications in Africa, for instance, seem to make more sense to me. But I don't think they're the end of the evolutionary chain. I think we're still traveling down that way. But if I'm going to put a little bit of my funds into crypto just to see what happens, I think these would be the ones I'd do. What I am very interested in, though, is Benny's arguments that, if crypto is here to stay, then you are going to need a safe way of holding it, a safe way of participating. And I think that's where Coinbase begins to look much more interesting.
Yeah.
I will never put more than a fraction of 1% of my assets into this nefarious market that the pair of you keep pushing at me. But if it makes me money, I might buy you both a lemonade when we get back to the office. Thank you all very much. I hope you've appreciated this Shard Lite-Bite. Today's has been a little bit light-hearted, but I hope you picked up some interesting themes about where cryptos and Coinbase are going. Thank you all very much.
Thank you.